Hello, everyone, and welcome back. I want you to know something. Before I get into this real life example, we're going to pay off this mortgage for our member here. All right. We want to realize that the velocity banking method, not everybody gets it. Right. And the reason why most of the time people don't get it is because it's too simple. Okay. You're looking at the numbers, and the numbers, for the first time in many of your lives, the numbers are convincing you, not words. And so I think that's why the velocity banking method is such a powerful tool. Because here you have numbers convincing you. That way you can't argue with it. All right? So you're not arguing with me, right? You have to argue with the numbers, and many of you don't. You look at it, you know how to add, you know how to subtract, divide, multiply, and you're like, I can't believe that this was missing from my life. So let's get into this real life example, and we're going to go ahead and quickly pay off the mortgage for our brother up in New York City. Hey, look out. I'm still not grasping the concept of taking, for example, $10,000 line of credit. Don't I still have to pay my regular mortgage payment? I have 15 years and 6 months left on my mortgage. The payment is $2,183 a month. Plus, I have monthly bills. How can I do this? Okay, well, first of all, let me go ahead and make sure you know how to not only pay your mortgage, okay, but also your monthly bills. Now, we're going to do that by example. Let's say $5,000 is your income, okay? Let's say $3,000 is your expenses, all right? And your monthly discretionary income, or your cash flow, we'll put a C there for cash flow, is what? $2,000. Now, how did we get that number? That's right, we subtracted this number, the income, minus the expenses, equals the cash flow, okay? So I minus E, I know algebra, equals C. All right? So you'll want to remember that equation, all right? Because you're going to be using that throughout the velocity banking time. Now, it is this number, the cash flow, that is paying off your line of credit. Now remember, you're paying your bills and you're paying your monthly payment. You're even making the mortgage principal payment. Okay? From where? The line of credit. So as you're doing that, the line of credit still needs to get paid, doesn't it? How does it get paid? By your income. But like you said, Marcus, like you said, you still got monthly bills though. What's that all about? You still got the monthly bills, the expenses. Where are you going to be paying it from? Your line of credit. Well, how's that so? Don't I still have a minimum monthly payment? You no longer have to worry about minimum monthly payments on your line of credit when you're using it as your new checking account. Because remember, $2,000 is being left in there, and that's what's paying off the line of credit, this $2,000, the cash flow. Do you see the flow of money? Do you see how that can be exciting as you're looking at it? So I minus E equals C. You know, they used to have a saying in grammar school and at elementary school that I before E except after C. Well, in velocity banking school, the velocity banking university, all the students know that I minus E equals C. Let's go ahead and get that mortgage paid off, shall we? So you have the $10,000 line of credit. You also have the 15 and a half years on your term. Congratulations, by the way. Thank you for paying your mortgage. $2,183 is the minimum monthly payment on that, because remember, it's an amortized loan. We have the loan amount of, now you didn't give me this, right? We calculated it. Let me know if I'm right. $324,394. The total payment is $406,038. This is the bank's plan for you. The total interest, the bank's plan, $81,643 at 94 cents. And the annual payment, $26,196. Now, you're not going to get away from the monthly payment, but now you know how to pay it. How? From your line of credit. Once you get paid, right? Once it hits the checking account, once the check hits the checking account, what do you do with that money? You're going to be transferring it, not paying your bill, not paying your line of credit. No. It's transferring from the checking account to your line of credit so that, watch this, you can place the $10,000 to the mortgage principal. Now let me stop right there and remind everyone that there is a credit utilization ratio to be concerned about. I know many of you are concerned. Remember, we stress 25% credit utilization ratio, make that the maximum. However, if paying off your mortgage is an absolute priority for you, then go ahead and place the maximum. Talk to your bank and ask them, hey, what would you think about me taking the maximum amount from the line of credit, or even $9,000, just to be safe? Because remember, if this is all you have, that emergency, $2,000, right, can be used as an emergency if you need that capital, okay? And of course, the line of credit can go where? It can go up as well. So make sure you're asking for those increases every 6 months or so. If you don't get the increase, don't worry about the hard inquiry. You can actually dispute that, and they should be able to take that off. Talk to us if you have any questions about that, okay? So listen, if you're the one that's about it, and you're like, I'm going to take all of the $10,000 from my line of credit and place it towards my principal payment. CJ, I know how to pay it off. You told me that I can use my income. I'm going to put it in my line of credit. I'll have that sucker paid off in what? What's $10,000 divided by $2,000? I'll have it paid off in about, what, 5 months? You see what I do there? I let you know how long you can expect to pay off your line of credit. And let's go ahead and give you that formula as well. We're going to take the loan balance, LB. We're going to divide that by the minimum monthly payment, and that's going to be the, how do we pay off? Payoff time, POT, okay? So LB divided by MM equals POT, payoff time, or elimination time, ET, right? Phone home. So remember, when we have the $10,000 in the line of credit, man, we can do a whole lot with it, can't we? And once it's replenished, what are we going to do with the $10,000 again? We're going to place it right to our principal, because the interest feeds off of the principal. So you're not going to have to worry about paying this gargantuan amount in interest. That amount, okay, much of that amount is going in your pocket. All right? It's going in your pocket. You're saving yourself money. You're building your capital instead of the bank's capital. Okay? Now, I know all of this is super duper simple. And if you even want a more simple way, you need to get with me. info@velocityc.com or creditwiz@investorpro.org. We can definitely assist you in getting this knocked way out, Marcus. All right. Now you know how to pay your monthly bills. Now you know how to pay that monthly payment. Now you know how to get rid of, eliminate, cut the head off of this mortgage. Okay? You know how to do it now, right? Get with me if you have any questions. And folks, thank you so much. Like I said, we have a software that can absolutely do this for you. Just plug the numbers in and it tells you what to do. Let me know. You guys have a great night, and don't forget to watch this video right here. Oh my goodness. If you want to know something about velocity banking, you need to watch this right here. All right? You guys take care and have a great night. God bless.